Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Friday, June 17th at 8:08 a.m. here in Northern California. In this video, we're going to review the Bitcoin price chart. We're also going to take a look at the stock market and talk about inflation, interest rates, and the R word, recession. It's funny, I opened up TradingView and this article was the first thing that came up. The R word runs rampant. Recession fears are reverberating through the market louder than fart in a library. I thought that was hilarious. I don't know why. All right, let's start by taking a look at this Bitcoin price chart. And, I've said this in a previous video, but historically, now this is when you're doing technical analysis, you're doing history. You're simply looking at history to see what we can extrapolate for the present. Historically, this yellow line is the 200-week moving average. Historically, if you buy Bitcoin, whenever it touches the 200-week moving average, you do really well. One time in its history, it came down and tested the 300-week moving average. Right now, we are below the 200-week moving average. If you just start DCAing into Bitcoin, when it touches or breaks beneath the 200-week moving average, historically, you do really well. By the way, this is not financial advice. I'm not a financial advisor. I'm neither telling you to buy it nor refrain from buying it. I'm just telling you what I see. So we broke beneath the 200-week moving average. We touched the 200-week moving average. Over here, we were there for about 5 or 6 weeks. Here, we were on it for about 9 weeks. Here, it was only about 3 weeks that you had an opportunity. We don't know how long we're going to be in this zone between the 200 and 300-week moving averages. If I had to guess, I would say 4 to 6 weeks before we move above the 200-week moving average and do not come back to test it for at least a couple of years. And here's what we see: 2020, 2018, 2015. This is a historic moment. Touching the 200-week moving average is a historic moment. Keep that in mind. But let's take a look at what's happening in the economy. This is the inflation rate. As we can see, inflation is rising. This is the interest rates. So what's happening is as the interest rates rise, inflation should come down. Raising interest rates hurts the economy, but inflation hurts the economy even more. And so raising interest rates is a temporary stopgap in order to get inflation under control. Here's what's interesting, okay? I drew this chart more than a year ago. I drew it somewhere between February and March of 2021, and you can tell because this is outdated. The Nasdaq is at the top of an ascending, narrowing wedge, an ascending wedge. So it was up here. It was in this area when I drew this chart with bearish divergence and a symmetric triangle in the RSI, which means we were getting lower highs in the RSI as we were getting higher highs in the price. Keep that in mind because that is the most important piece of technical analysis that you're going to need for the future, okay? I anticipate a breakdown and an extended correction. So this is already back in February of last year. We knew nothing about inflation, about raised interest rates, but I'm looking for a correction in the stock market and a breakdown and extended correction. However, if it breaks above 14,179, this line here, the top could be 16,306. And look what happens. It breaks above and it comes right up to this line. I haven't changed this chart in more than a year. I haven't moved a single line in more than a year. Sure enough, it tests the top of that chart and then it breaks down. And where's it heading? Well, it looks like it's heading down to this correction zone that I anticipated us coming down to more than a year ago. Now, but watch what's happening. Look, the RSI is in the oversold position. This is a weekly chart. So how do you gauge the top? The way to gauge the top is when you start seeing bearish divergence in the RSI and an ascending narrowing wedge in the price. The combination of an ascending narrowing wedge in the price on the weekly chart with bearish divergence in the RSI on the weekly chart tells you that you're heading towards the top. It's going to take time to play out. It's not going to play out in a week. It may not even play out in a month. Once we started seeing that and we were up in this area, I started calling the top. We're close to the top. And all you got to do is look at where the relative top of that ascending narrowing wedge is, and that becomes the top of the market, right? And so that's what we were aiming for, and that's exactly what we got. But the next question is, how do you call the bottom? Well, looking at the depth of this ascending narrowing wedge, it was 34.7%. And so I was gauging, where do we break down from this ascending narrowing wedge? I guessed here. And it's almost exactly where we broke down, basically. Okay? And so based upon that, I charted a breakdown of about 35% based on this ascending narrowing wedge, and that took us down to 9,153. Now, we may not make it all the way down there. And the reason why I think we may not make it all the way down there is because we're already in the oversold position in the RSI. And this is where you start to call the bottom, is when the RSI gets to the bottom. And so look, this is the stock market. It's the same thing with the crypto market. If you look at this Bitcoin chart, there's only been one, two, three, 4 times where Bitcoin breaks beneath the 30, really into the oversold position in the RSI on the weekly chart. If you simply looked at the RSI and every time it touched this line, you bought Bitcoin, you did well, right? Because these bottoms in the RSI always correspond with the bottom in the price chart, right? So, these data points are pretty solid. Historically, it works. But if we're looking at this, I don't think we're going to see an extended massive sell-off in the stock market. Looking at this chart, it played out the way I expected it to play out a year ago. I drew this chart more than a year ago. And I'm expecting we may come down and touch this line here. I mean, of course, anything can happen. But simply looking at the historic data, we are either at bottom or we're close to a bottom in the stock market. Looking at the historic data, we are either at bottom or close to a bottom on the Bitcoin price chart. I still think that we can see a very possible retest of the 300-week moving average in Bitcoin, which would take us down to $16,718. But other than that, I think we're pretty solidly at bottom. That's what the data says to me. All right, short video this morning. That's all I got for you today. Remember, it's not financial advice. It's just my opinion. Do me a favor, hit that like button. Leave me a comment to let me know what you think. I need to see some more comments. I've been seeing fewer and fewer comments. I appreciate your comments. You need to be a part of a community in order to make it through a crypto winter. I want you to check out my Patreon community at patreon.com/cryptogenic. Specifically, the gold level and above, I do weekly Zoom meetings every Monday evening for members in the gold and above communities. All right, thanks so much. That's all I got for you today. This is Cryptogenic. Oh, remember to sleep in peace, wake in joy, walk in love. This is Cryptogenic, signing out.